If you're following our Global Economic Outlook series, hit subscribe to stay updated with new country releases. Welcome to Kuwait in 2025, a nation at a pivotal economic crossroads. On the surface, Kuwait boasts immense wealth, low government debt, and enviable financial stability. But beneath this prosperity lies a heavy dependence on oil, slowing GDP growth, and an underdeveloped non-oil private sector. High interest rates needed to maintain the currency peg are stifling business lending and investment. Youth unemployment and a skills mismatch persist as the public sector remains the default employer. These challenges create social and economic pressures that headline figures can't hide. For investors, Kuwait offers both opportunity and risk. Fiscal strength enables bold projects, but political gridlock often stalls progress. Sectors like logistics, technology, and renewables hold promise if reforms materialize. The real question: can Kuwait implement the changes needed to unleash its private sector and diversify its economy? Investing here is more than a financial decision. It's a bet on Kuwait's ability to reinvent itself. The stakes are high, and the outcome will define the nation's future. For now, Kuwait stands at a crossroads, poised for transformation but facing real obstacles. The next moves will determine whether it remains a story of potential or becomes one of progress. Let's break down the numbers shaping Kuwait's outlook. After a strong 2023, GDP growth turned negative in 2024, hit by OPEC plus oil cuts. Modest recovery is forecast for 2025, but it's fragile and hinges on oil quotas and non-oil activity. Inflation has stayed moderate around 3%, but rising costs in housing and food are squeezing households and businesses. Stable prices are good for investors, but also signal weak consumer demand. Unemployment appears low on paper, but youth joblessness and underemployment in the private sector are real issues. The public sector employs over 80% of Kuwaitis, leaving the private sector reliant on expatriate labor and struggling to attract local talent. These figures reveal an economy in slow transition, with diversification away from oil still elusive. For investors, the message is clear: opportunity exists, but only if reforms address these structural challenges. The numbers demand action: diversification, labor reform, and a stronger private sector. The big question for 2025: will Kuwait finally deliver on long-promised reforms? Investors must watch for real change, not just optimistic forecasts. The potential is there, but it's contingent on decisive action. The clock is ticking. Let's talk about the cost of money in Kuwait. To maintain the dinar's peg, the central bank has followed the U.S. Federal Reserve's rate hikes, pushing local interest rates to decade highs. This keeps the currency stable but makes borrowing expensive, slowing business investment and private sector growth. Small and medium businesses, in particular, are feeling the squeeze, delaying expansion and hiring. High rates also dampen consumer spending, especially on big-ticket items like homes and cars. The central bank faces a tough trade-off: external stability versus internal growth. Relief hinges on a U.S. pivot to lower rates, which would allow Kuwait to ease its own policy and stimulate the economy. For investors, the timing of any rate cuts is critical. Lower rates could unlock pent-up demand and investment. Until then, the high-rate environment remains a major headwind for non-oil growth. The central bank's next moves will shape the investment climate in 2025. Watch for signals of monetary easing. It could be the catalyst Kuwait's private sector needs. The stakes are high, and the window for action is narrow. Monetary policy will be a key driver of Kuwait's economic trajectory this year. Kuwait's public debt is impressively low, less than 10% of GDP, thanks to decades of oil wealth and fiscal conservatism. This gives the government huge capacity to borrow and invest in diversification and infrastructure. But political gridlock has blocked a new debt law, creating liquidity challenges despite vast wealth. Without the law, Kuwait can't issue new debt, forcing it to dip into reserves for spending. This paradox, wealthy but cash-strapped, highlights the cost of legislative stalemate. For investors, the passage of a new debt law would be a major positive signal, unlocking fiscal flexibility and reform momentum. Political consensus is as important as financial strength. The world is watching to see if Kuwait can break the deadlock and move forward. Oil is Kuwait's blessing, and its burden. The sector dominates GDP, exports, and government revenue, funding high living standards and a massive sovereign wealth fund. But this reliance makes Kuwait vulnerable to global oil swings and OPEC plus decisions beyond its control. Non-oil sectors struggle to compete with oil's profitability, and the public sector's appeal drains talent from private enterprise. The government's new Kuwait 2035 vision aims to diversify, but progress is slow, hampered by political gridlock. For investors, the gap between ambitious plans and slow execution is a key risk. True diversification remains a work in progress. Oil wealth offers stability, but also stifles innovation and reform. The challenge: turn oil riches into a sustainable, diversified future. Kuwait's potential is clear, but so are the risks. The biggest: slow, stalled reforms and persistent political stalemate. Oil price volatility threatens fiscal stability and market confidence. Labor market rigidities make it hard for private firms to attract local talent, deepening reliance on expatriates. Regional geopolitical tensions add another layer of uncertainty. For investors, thorough due diligence and a clear-eyed view of these risks are essential. Progress on reform and diversification is the key to unlocking Kuwait's promise. Until then, caution is warranted. For investors, 2025 is a year of watchful waiting. The biggest signals: a shift to lower interest rates, passage of the debt law, and real progress on new investment projects. Concrete action like flagship public-private partnerships will show if Kuwait is serious about reform. The nation's wealth and low debt offer a safety net, but only if political will unlocks it. The choice is stark: maintain the status quo or embrace change and unleash the private sector. Investors should watch for the inflection point, when talk turns to action. The risks are real, but so is the upside for those ready to move when Kuwait does. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.